Hello, everybody. So today was a tough day in the market, a tough day for growth and for a lot of the stocks that I cover on the channel. Macro ruined MicroStrategy's party. Am I bullish? Yeah, I'm very bullish. But the short term, nobody can predict what's going to happen in the short term. So let's go over the day, and then we're going to talk about MSTR in the second half of the video. Let's go over today. Bloody Fridays are back, and boy, have we had a lot of Bloody Fridays in the past 5 years. I miss the 2010s. I really do miss the 2010s because the number of days where we've had correlations go to 1 ever since the events of 2020 have just been pure madness. And that started in 2018, but that was like very short-lived. Like we've had so much volatility, it's extremely annoying because everything gets sold off. Arguably, I still haven't decided. I know the consensus seems to be that the call of MSTR yesterday, that call was their best call ever. I still haven't decided because November was still the best call ever. Anyways, that's not the point. It was a great call. Second best or first best? We can argue that. Second best or first best? It might have been the second best for me. But anyways, the stock should have been up. This was an amazing call. The ATM's gone. There's no more ATM until 2.5. I.e., until MSTR trades at $600, there is no more ATM. But yet it sells off. It sells off because Bitcoin bad, risk bad, Nasdaq bad, and of course MSTR is becoming a bigger and bigger portion of the Nasdaq. Nasdaq was the index that impacted the most today. Anyways, stock-specific information really did not matter today. 3 reasons for this very annoying drop, and usually we don't get all of the bad stuff all at once, but this Friday we did. The jobs data, which not only released bad data for this month, but also revised 2 prior months of data. Then Trump fired the head of the Labor Statistics Department. He fired her. I think it was her. Anyways, then there was Trump calling Powell to resign because it's true that on the Wednesday call, on the Wednesday Fed presser, like the press conference, Powell went on and on and on about how the job market was strong. Like he went on and on and on about why they didn't drop rates because the job market was strong. So anyways, and then at the same time as the jobs issue and this whole Fed madness, the market is still trying to recover from a very disappointing Wednesday Fed meeting. You have headline risk. I call this mostly headline risk of Trump's latest tariff, and Europe's good. It's 15%. China is good. Like all of the biggest trading partners of the U.S. have been dealt with, but the market still reacted to these headlines about new tariffs going into effect for countries that did not negotiate. I mean, according to the President of the United States. So, anyways, I think the only credible annoyance on these new tariffs, the market must have been annoyed because of Brazil, Canada, and Switzerland. These are really the big countries where there is still no deal. The rest is just very, very tiny country. It has not a big impact on the U.S. economy. And then you had this last thing, Trump again in a press conference in the morning. I guess getting on a plane or something. He was like, "Oh, we've deployed nuclear submarines," and so of course all of the headlines were about nuclear submarines in response to Medvedev. Now, Medvedev, former president of Russia, is known for making incendiary comments. He's been making incendiary comments since he was, I guess since he was involved in Russian politics. So of course, I would not pay any attention to that, but the market does, because the market really cares about headlines. Headlines are what matter. Headlines are right now. They're right away. There is 10 seconds, right? Headlines are great. So that's why we had this awful day with no recovery whatsoever. It just kept going down and down and down and down. And of course, what do you sell? Well, you sell Bitcoin. Bitcoin sold off just like everything else because Bitcoin is risky. Never mind, it's on a fixed supply schedule, and never mind the clock is ticking, and we're gonna cut in half the new supply again. Anyways, MSTR was down, Bitcoin was down. And the video I was going to make today was this video. I had started working on this video. It will be released at a later date. Who will sell the shares now? That was, and this is a picture of the shorts. So I'm going to release this video. I was working on it. Change the plans with the news. But there is bullishness in today's macro madness, which is the jobs are not there. The jobs are not there. There's calls for Powell to resign. You have another governor at the Fed, a woman, I can't remember her name. She resigned and she decided to go back to her university. Therefore, Trump's going to be able to nominate someone who's on the interest rate committee at the Fed. So there's quite a bit of bullishness. This bullishness is reflected in the Fed Watch tool. The Fed Watch tool is now predicting 90% of a small rate cut at the September meeting. So unfortunately, the Fed doesn't meet in August. But remember, you have Jackson Hole in August. So in August, they meet at Jackson Hole, and they don't make a rate decision, but they do make a speech. And historically, at least for the past few years, Powell has had a tendency to really crash the market during that speech because he's usually always very bearish. Every time he speaks, the markets drop. So anyways, the market is saying, 90% chance of a cut. Okay. It's been 4 years where I've seen this tool say there's going to be a cut, there's going to be a cut, there's going to be a cut, and then at the end of the day, there is no cut. This tool, in my view, is not reliable. My working hypothesis is still the cuts are coming in May 2026 when a Dove is in the Fed chair role, when there is Mr. Dove, that's going to be their name. And clearly, the Fed is not data dependent. It's not using the data. Otherwise, it would have dropped the rates. But I know fiat lovers disagree with me on that, and that's fine. But to me, it's not data dependent at all. In fact, if you look at inflation, I was listening to a podcast with the new Cleveland Fed data. They were saying that taking into account the new rent drops, something like inflation 12 months is a minus 0.1% or something like that. So anyways, deflation is the bigger risk. But that's not the point. So I'm done with the macro rant. You get it. It's nuts out there. We had kind of a triple whammy with everything being thrown at us. And so the market correlation went to 1. Everything was sold off. Everything was bad. Yields dropped because people were like buying the treasuries. So anyways, this was the day of the day. So now let's talk a little bit about MSTR. So what are the 6 pieces of news introduced by MSTR that MSTR told us about? The first one was the new equity guidance. When are they going to issue the common ATM? The common ATM will only be issued after MSTR trades above a 2.5 MNAV, a 2.5 MNAV to a 4 MNAV, they will issue equity, maybe opportunistically, and that all depends between the relationship between the price of Bitcoin and, of course, their shares and, the sentiment in the market, etc. So they allow themselves to issue equity only after 2.5 MNAV, and right now to be at 2.5 MNAV, the price of MSTR should be at 600. Right now, MSTR is trading at 366, so we have a long way to go, not quite, but almost a double before we see a common ATM again. They probably won't let the stock ever get past a 4x ATM because whenever you get a 4.01, they will sell so many shares that they will be buying more Bitcoin. And this is a new slide. This is an addition to the press conference. We've known this before, of course, from the May Bitcoin for Corporations conference. That strategy world through. Saylor had said that already in the podcast. But if MSTR were to ever trade below a 1 MNAV, they would issue credit to buy back the shares, which is a very logical thing to do. There's a handful, not a lot, but there's a handful of Bitcoin treasury companies that are trading at like a 0.9. If they were to drop further, it would be in their best interest to just go borrow money and buy back the stock, because the market can be very irrational. But I think 1 is a floor for most of these companies because the value of Bitcoin is very clear. It's priced internationally. We know the value of Bitcoin. It's not like the market's impression of the value of their next FSD project or their stake in XYZ company. That's much more murky, but we know exactly the price of Bitcoin, and so we know exactly where a company is undervalued or overvalued relative to the price of Bitcoin. Anyways, no more ATM on MSTR. People should be freaking out in happiness right now, especially in my comment section. People upset about the ATM. They should be so happy. But anyways, the stock's down. Point number 2, piece of news number 2 we got. That's the announcement that was right before the call. They announced a $4.2 billion stretch at the market program. So bigger than the $2.1 billion that they had for Strife, I believe it was. Anyways, Stretch was a very, very popular IPO, and they anticipate much more demand for Stretch. In anticipation of a demand for Stretch, there's so this is a discussion of both the retail demand for the instruments, the alignment of the investor with the shareholders, right, and also convertible debt. So now Phong Le, right, the CEO of Strategy, has said it outright. They are going to equitize, which was always the case. So the debt's going to turn into equity. All of their convertible debt is going to be turned into equity when the time comes, right? When the debt matures, and then they will not do any more convertible debt offerings. They're done with the debt offerings. He said that on the call. One of the chief reasons that he said on the call for being done with the debt offering was the fact that retail is interested in these lower volatility, lower yield, lower volatility Bitcoin-backed instruments. Retail is interested in that, but they can't access it if it's in a convertible debt format, because this is very tough to access. You got to be an accredited investor, you got to be a hedge fund, all that stuff. And they were showing this, the amount of retail demand for their preferred, and you can see it's steadily increased. The first preferred they only had 4% of retail demand. I'm talking at IPO, right? And the latest one, they had 23% of retail demand at launch. So think about it. That's a 3.5x, 3.7x times more retail demand compared to the prior offering. So it's been increasing steadily, and so we may see a lot of demand from retail for these instruments. And this is what I've said before. I think these instruments are very valuable to the FIRE community, the financial independence retire early community, who are looking to just have a stream of income. And in the US, I believe it's like 98,000 and 48,000 if you're single, something like that. You can get it tax-free as a qualified dividend. So if you're a married couple, you could pretty much come up with $600,000, buy one of these instruments, and earn $98,000 tax-free and retire. And so that's really tempting. Those instruments should be really tempting to retailers who are in the know, and especially to like the FIRE community. They're making instruments that are very tough to resist in each of their specific, audience, demographic, type of buyer. They're kind of trying to create the perfect financial instrument for different audiences, but backed by Bitcoin. So Bitcoin is better in every way if you refine it into something else. And so I would not be surprised, and I don't know what other instruments they could have. They will definitely have more instruments. I would not be surprised their next instrument, which they IPO, if they have even more retail interest. And sure enough, in the comment section, many of you have asked me, does it make sense to ever buy those? I'm a common guy. I like the common the best, but I know people have different risk profiles, etc. Another big deal was the updated outlook, and we know they were going to update the outlook. I mean, Phong Le made it sound like they were not going to update the outlook again in Q3. I think they will update the outlook again in Q3. But their outlook is beautiful. It's a double. They started the year. They had said they would do was it a 15%? I guess they say original. That's from last year. So they've essentially doubled their guidance, because I distinctly remember 15% was the initial guidance. I don't know why it says 25, but that's a 30% guidance. That's a 20 billion from 15 billion original, and to me that was also lower than that. So they've increased their guidance quite a bit. We're talking about a near doubling in the guidance compared to where it was in November and December of 2024. That is very bullish. 30% yield is very bullish. My guess is that they will update that guidance again. Phong Le on the call was very clear about the $150,000 price target for December 31st, 2025 was a bearish target, and he was mentioning that all of the analysts following MSTR actually have a target for Bitcoin by the end of the year to something like a 165 or a 168 or something like that. So they're a good 10 to 15% lower than the analysts target, and those analysts are not the bullish Bitcoin analysts, they're the Wall Street analysts who follow MSTR. And I also think 150 would be very, very nice by the end of the year. I'd be happy. I'd be very happy with that. Anyways, we'll see where it goes. And of course, the BTC gain is dependent on the price of Bitcoin, right? And indirectly, of course, the BTC yield too, because if it's too expensive, you can't buy as much. So it's all dependent on the buys of Bitcoin. It's tough to predict. There's predictions to be made here. It's a moving system. It's a complex system. But anyways, point number 5, they think their stock is undervalued. Now, a lot of CEOs think their stock are undervalued. In the case of strategy, they really think the stock is undervalued because everybody on the board just bought. You may have seen those insider transactions. There's something like more than 5 people made meaningful transactions buying the stock recently all together. So I entirely agree with them, of course, that it's undervalued. But they are way more bullish on their own stock than me, and they're putting their money into the stock. So I have to really give them kudos to that. So they're talking about the multiple. What type of multiple do you have? So for the first time, they can provide a traditional valuation model because they have GAAP earnings now, thanks to the fair accounting rule changes. So based on their earnings, so for the year, let's assume $24 billion earning for the year. If you place a 10x to a 40x multiple, right, on the 24 billion, you would get to the lower end, to the 10x, you would get 240 billion. To the higher end, you would get 960 billion. The average, right in the middle, would be about 600 billion. So what? That's 6 times your money from here. I didn't put the market cap. I can't remember. The market cap is about 100 billion on this stock. So this has got to be a 6x per the traditional model. And you can see if you do the Bitcoin NAV, so you don't use GAAP this time, you just use how they define it as BTC gain, and you put a multiple on it. Well, that's $575 billion, and that doesn't really assume any growth in the price of Bitcoin. That assumes that they're able to, continue sustain a yield, and they're able to continue to generate that Bitcoin yield. So I don't necessarily think those numbers 575 or 600. I don't think they're too bullish. I think they're a little conservative, even in their stated opinion of their value in their own company. That's even a little conservative. And there's some YouTubers out there who think this company should probably already be $1 trillion. So I would argue that's on the more conservative side. Personally, I really don't care what this stock is going to be trading at. Even within the next 2 years or 3 years. It's to me, this is a long-term investment. If you're an investor, if you think you have more money to invest in the next few years, then you want the stock to stay down, and then you look at this day as a blessing. But of course, losing money, paper money, right? Because you probably never realized the huge gains we've had on this stocks. But if you haven't realized your huge gains on this stock, really the loss is just paper money. You thought you had this much, now you have this much, and you're sad. And it's prospect theory, and the pain of the loss creates 3x more pain than the feeling of the gain. But nonetheless, I don't think this is too bad. Let me conclude with this slide. The refinery gets bigger. That's the point of the slide right here. And they talk about what they're responsible for and what others are responsible for. And of course, you have MSTR ETFs, like, for example, the 2X ETFs, the income ETF, like MSTY. Then you have people who just do options and just harvest volatility for themselves. Perhaps people that are more advanced, but it's not really that hard to do either way. So, individual traders could do options on their own as well, and buy options on their own. Then you have the MSTR Common. Keep it simple, stupid. That's my main exposure to the stock. The MSTR Common, that's what I like. I mean, for most stocks, I just do the Common. Then you have IBIT. So IBIT, of course, is not something they issue. I have long said that I would love strategy to issue an ETF. and again, maybe it's not their expertise, but if they were to issue something like an ETF, I don't know what they could do or what they could add in there, but I would argue they have such a huge following that if they issued something like an ETF or a la ETF, they could collect some capital doing that. They could collect some fees doing that. So maybe not. The converts, that's gonna be gone. They're gonna be done with the converts, and then we have Strike, Strife, Stride, and Stretch, and clearly. Right now, they are focused on the preferred, and they are offering all of these preferred, 4 of them. And of course, you have the safest with the highest BTC rating 10x, and you have Stretch with also the highest BTC rating 10x, but less than Strife. It almost makes you wonder in the way they speak if they had really would have wanted Stretch to be on the top, actually, because it would have made a little more sense if Stretch was on the top, I think. But I don't know how they come up with instruments, etc. But because Saylor has highlighted when they launched Stretch, he highlighted that the BTC rating of those two should be very, very, very similar. But really, in the way they worded Strife is always going to be ahead of Stretch. Anyway, this is not a big problem because it looks like they're going to issue way less Strife than they will issue Stretch. Just looking at the size of the ATM. Then you have Strike, which has an embedded call option, and then you have Stride, which has a non-cumulative skippable coupon. They can skip the payments on Stride if there were to be any issue with the price of Bitcoin, although of course they don't intend to skip it, but this is intended to be their junk preferred, if that makes sense. I mean, as much as you can call junk something based on Bitcoin, which is not something I would call junk. And of course, what's the next instrument? They highlighted that one last time on the call. The next instrument is going to be an international instrument. And so I don't know when, I don't know where, I don't know how. I know that, as Saylor predicted, Metaplanet beat them to issuing a preferred in Japan. Metaplanet just issued preferreds in Japan, made an announcement. I need to make a video about that, but Saylor was right. Metaplanet beat them. So I don't know. Will they do an instrument in Europe at some point? I have no idea. I'm excited to find out. I'm excited to report on it. This is just the beginning of the journey for them. And they've also formalized one more time in the call that AI was used to come up with much of this stuff. So in general, some new information, not too much new information if you follow MSTR very, very closely, but still some new information. But to people who only follow the stock every quarter, if you follow the stock just once per quarter, that could have looked like there's a lot of new information to you. And so Wall Street could have been quite pleased. Anyways, this was not investment advice, not financial advice. This is only entertainment. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.